Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. This is the last theory video on capital gain. After this, I'll start the problems on computing the income from capital gain. In this video, I'm going to explain you about the exemptions available from long-term capital gain. Income Tax Act has given some provisions that if the assessee satisfies some conditions, then exemptions under section 54 will be allowed. So what are the exemptions? How much is the exemption? I'm going to explain you in this video. So watch the video till the end, because in the problems we are going to come across this point regarding exemption from LTCG. Apart from that, in examination, theory question may be asked, explain the provisions of exemption under section 54, or explain the provisions of exemption under section 54B, like that. So before starting, take the screenshot of the points which I have written, then I'll explain. Now, exemption from LTCG under section 54, 54B, 54D, then 54EC is there. Different exemptions are given. Important exemption I am going to explain you. Now, in order to promote investment in priority and specified areas and to provide financial security, Income Tax Act provide a relief to the assessee on transferring certain long-term capital asset. So when the assessee transfers a long-term capital assets and makes some investment in priority sector and specified areas, then Income Tax Act will give some relief to the assessee in the form of reduction of tax liability. So by availing this exemption, the tax liability of the assessee will get reduced. But this exemption will be given only for specified cases. That means the assessee, if he invests the money in the priority sector or specified areas, then only exemption will be given. So the net result is a substantial reduction in tax liability. By giving this exemption, the tax liability of the assessee will get reduced. Now the provisions are as follows. The first, purchase or construction or investment. Remember three words: purchase, construction or investment in the permitted line of investment within the period of stipulation. So Income Tax Act says if you want to avail exemption under section 54 or 54B, 54D, like that, what you have to do is you have to purchase, you have to construct, or you have to make the investment. You have to make the investment in the permitted line. Wherever the Income Tax Act says, there only you have to make the investment, and within the stipulated period of time. The Income Tax Act has given that the time period. Within that stipulated time period, he has to purchase, he has to construct, or he has to invest. And the given permitted line of investment, there only he has to make the investment. Secondly, to avail the benefit of tax, the assessee has to retain the ownership of the new asset for a minimum period of 3 years. That is, not to transfer the new asset within 3 years. That means if you want to avail the exemption under section 54, 54B, 54D, what you have to do is purchasing the new investment. The new investment should not be transferred within a period of 3 years. After 3 years, you can transfer. But Income Tax Act says whatever new investment you make, new asset you purchase, that new asset should not be sold within a period of 3 years. Thirdly, if the amount of capital gain is not utilized for purchase or construction or investment in a new specified asset, then before the due date of filing the return of income, the amount can be deposited in any branch of public sector banks in accordance with Capital Gain Account Scheme 1988. The amount deposited will be given as exemption. Now, see carefully here. If an SSC has not purchased any asset, not constructed any asset, not made any investment, but still he can get the exemption, provided he has to deposit the capital gain amount in a public sector bank, in a scheme called Capital Gain Account Scheme 1988. For example, I have sold one building and got a capital gain of 5 lakh rupees. Long-term capital gain, I got 5 lakh rupees. I have to pay tax on 5 lakh rupees. So I want to reduce the tax liability. So from that 5 lakh rupees capital gain, I have to purchase a new asset, I have to construct the new asset, or I have to make the investment of new asset. If I am unable to do any of these, still I can get the exemption, provided that capital gain amount should be deposited in a bank, in a public sector bank, in which scheme specifically Income Tax Act has given capital gain account scheme. So I should go to the public sector bank and tell to the branch bank manager that I want to open the account. That account is capital gain account scheme account. In that account I am depositing this amount. So if I make the deposit, I will get the exemption. The two cases are there. One case, either you purchase or construct or invest. If you are unable to make this investment, then deposit that amount in a public sector bank in capital gain account scheme 1988. You will get the exemption. These are the provisions which are given for exemption under section 54. Now, one by one exemption briefly we will discuss, so that while doing the problem it will be easier for you to understand. First of all, section 54, exemption from long-term capital gain from residential property. Remember these points. In problems we'll come across this point. Apart from that, in theory, in examination they will ask you what are the provisions regarding exemption under section 54. So this is the exemption from long-term capital gain for transfer of residential property. Now what are the conditions? If an SSC transfer a residential house, whether it is self-occupied or let out, the house property which is sold, transferred, should either be self-occupied or it may be let out. And the purchase or construction of two houses for residential purpose. The SSC can purchase either one house or two houses, right? For example, I have sold one residential property during the current previous year. I got the capital gain. Now from that capital gain, I am purchasing one more new house or two more new houses. Then I will get the exemption under section 54. Selling one residential house and purchasing another residential house, exemption under section 54 is allowed. The exemption is list of the following two amounts: cost of the new asset plus amount deposited in capital gain account scheme, or capital gain amount. The capital gain amount, already we got it. Now we have to find out how much is the cost of the new asset, or if any amount is deposited in capital gain account scheme. If it is there, then we add up both, right? This total or capital gain, whichever is least, that will be allowed as exemption under section 54. So again I repeat, section 54 will be allowed to an SSC who sold one residential house and purchases another residential house or two new houses. Then exemption will be allowed to the list of the following two: cost of the new asset plus amount deposited in capital gain account scheme, or second one, capital gain amount. Over. Next, exemption under section 54B. This is regarding capital gain on agricultural land. Remember this. Only 54 residential property and 54B agricultural land. If an SSC sold urban agricultural land, not rural, because rural agricultural land is not a capital asset. The gain arising from sale of rural agricultural land is not taxable. Urban agricultural land, it is taxable. So if an SSC has sold urban agricultural land and from the proceeds he has purchased another agricultural land either in the urban area or in the rural area. So here, if an associate transfers agricultural land in urban area and purchase agricultural land in rural or urban area, then exemption under section 54B is allowed to the list of the following two amounts. Selling one agricultural land and purchasing another agricultural land. Exemption is list of the following two. Cost of the new agricultural land plus amount deposited in capital gain account scheme. If the SSC has deposited some amount in capital gain account scheme, that will also be eligible. Otherwise, we simply take cost of the new agricultural land or capital gain amount. Whichever is least of these two will be allowed as exemption under section 54B. 54B. So we have completed two exemptions, one 54, another 54B. Now 54D. Now this is capital gain on compulsory acquisition of land and building which are used for industrial undertaking. If an SSC is having fund land and building and it is used for industrial undertaking and that land and building is compulsorily acquired by the government. Sometimes the government will acquire land and building. Why the government will acquire? For laying the railways or laying the, for example, master planning. For different purposes, sometimes the government will acquire the land and building of the people. So here also, SSC is owning a land and building which is used for industrial purpose and that land and building is compulsorily acquired by the government. From the proceeds what the SSC gets, he is purchasing another land and building for industrial purpose. So one land and building for industrial purpose is gone, government has taken. Another industrial building is purchased. Then Income Tax Act says exemption under section 54D will be allowed to the list of the following two amounts. First one, if there is a compulsory acquisition of land and building by the government used for industrial purpose, then the exemption under section 54D will be allowed to the list of cost of the new asset plus amount deposited in capital gain account scheme or capital gain amount. Whichever is least in these two will be allowed as exemption under section 54D. So three sections I have explained you. 54 is for residential house. 54B is for agricultural land. And 54D, land and building used for industrial purpose and it is compulsorily taken over by the government. That is true. Now one more exemption I am going to explain you. Section 54EC. Section 54EC. This is long-term capital gain on transfer of any capital asset, investment in specified assets, that is bonds. Income Tax Act says, if an SSC transfer any long-term capital asset and from that proceeds make the investment in specified bonds. The Income Tax Act has given a list of specified bonds. So if a person has invested in specified bonds, then only exemption will be given under section 54EC. Now, if long-term capital asset is transferred during the previous year and if gain arises, the SSC can claim this exemption if investment is made in specified bonds. Remember, any asset is sold, from the proceeds make the investment in specified bonds. These specified bonds are declared by the Income Tax Act. Now, the transferred asset, any land or building or both. The asset which is transferred should be either land or building or both land and building. Then investment in. So what are the specified bonds? The specified bonds are specified assets. Example, bond of Rural Electrification Corporation. Bonds of Rural Electrification Corporation. Second, National Highway Authority. National Highway Authority. Third one is Power Finance Corporation Limited. Power Finance Corporation Limited. Lastly, Indian Railway Finance Corporation. These are few examples of bonds which are called specified assets, and exemption will be given under section 54 EC. Now, exemption. Least of the following two will be allowed as exemption. The first one, actual amount invested. How much amount is invested in purchasing the bonds? Or second one, fixed amount, 50 lakh. For example, if an SSC has invested 70 lakh rupees in specified bonds, so 70 lakh or 50 lakh, whichever is least, 50 lakh is least, that will be allowed as exemption. Suppose the investments are made 10 lakh and the fixed amount is 50 lakh, whichever is least, 10 lakh is least, the exemption under section 54 EC will be 10 lakhs. That's all. So in this video, I have explained you about the exemptions available under section 54, 54B, 54D and 54 EC. And these exemptions are allowed only from long-term capital gain. This is the end of all the theory videos on capital gain. Remember, whatever I have explained, if you have the patience of watching and listening the videos carefully, then not only you can easily solve the problems, but also in examination theory question will be asked. What do you mean by capital asset? When we can say there is transfer of capital asset, what is cost of acquisition? What is indexed cost of acquisition? And what is the procedure of computing the long-term capital gain? What are the exemptions available from long-term capital gain? All these are the theory questions which may also be asked in examination. So have some patience, watch these all 5 videos carefully. Then in the next video, I'll start the problems on capital gain.